Here's a detailed summary of the Intuitive Surgical Incorporated, ISRG, Q4 2025 earnings call transcript, designed for clear and engaging oral delivery, introduction and overall performance. Good afternoon, everyone. We're here today to discuss Intuitive Surgical's fourth quarter and full year 2025 performance. Overall, it was a strong year, marked by robust procedure growth, increasing adoption of our Da Vinci 5 platform, and continued expansion of our Ion and single-port SPE systems. We are confident that we are still in the early stages of transforming minimally invasive care. CEO's highlights. Dave Rosa. Our CEO, Dave Rosa, began by highlighting the company's strategic priorities for 2025, the full launch and expansion of Da Vinci 5, driving adoption for focused procedures globally, building industrial scale and manufacturing optimization, and enhancing our digital tools. He reported significant progress across all these fronts. Procedure growth. Total Da Vinci procedures grew approximately 18% for the full year 2025, with multiport procedures up 17% and single-port procedures seeing an impressive 87% increase. Ion procedures also grew by 51%, leading to a total procedure growth of 19% for the year. In the U.S., Da Vinci procedures grew 15% to over 2 million, with notable contributions from general surgery. Internationally, procedures grew by 23%, with strong performance in Europe, Asia, and the rest of the world, now accounting for roughly 35% of global procedures. System placements. In 2025, we placed 1,721 Da Vinci systems, including 870 Da Vinci 5 systems, 107 SP systems, and 195 Ion systems. Demand for Da Vinci 5 strengthened throughout the year, with positive customer feedback on its increased capabilities and efficiency. We also began offering refurbished Da Vinci XR systems, recognizing a significant opportunity to expand access to robotic surgery internationally and in U.S. ambulatory surgery centers, ASCs. Platform momentum. Da Vinci 5. Customer feedback remains positive, with surgeons highlighting enhanced autonomy and efficiency. We received FDA clearance for several cardiac procedures on Da Vinci 5 using non-force feedback instruments, with a measured rollout planned. Single-port SP. The SP platform continued to build momentum, with 87% procedure growth driven by strong adoption in Korea and the U.S., and early growth in Europe, Japan, and Taiwan. We received 510(k) clearance for additional indications, including nipple-sparing mastectomy, inguinal hernia repair, cholecystectomy, and appendectomy. The initial launch of our SP stapler has been very positive. Ion. Worldwide Ion procedures grew 51%, with a global installed base approaching 1,000 systems. Our focus for 2026 remains on growing utilization and expanding capabilities, including ROSE technology and EBUS integration, to expedite diagnosis and treatment for lung cancer patients. 2026 priorities. Looking ahead to 2026, our priorities include global expansion of our platforms, digital feature releases, increased adoption for focused procedures, industrial scale and manufacturing optimization, and advancing innovation for new disease states. CFO's financial review. Jamie Samath, our CFO, provided a detailed financial review, reporting strong performance on both a non-GAAP, pro forma, and GAAP basis. Full year 2025 financials. Total procedures grew 19%, and total revenue increased 21% year-over-year to $10.1 billion. Pro forma operating margin improved approximately 70 basis points to 37%. Pro forma EPS increased by 22%, marking the third consecutive year of over 20% pro forma EPS growth. Free cash flow significantly increased to $2.5 billion, up from $1.3 billion in 2024. We also repurchased $2.3 billion of Intuitive stock. Fourth quarter 2025 financials. Revenue. Total revenue grew 19% to $2.87 billion, with recurring revenue up 20% to $2.3 billion, representing 81% of total revenue. Operating margin. Pro forma operating margin was 37%, impacted by approximately 95 basis points from tariffs, and a $70 million contribution to the Intuitive Foundation. Procedure and system highlights. Da Vinci procedures grew 17%, while Ion procedures increased by 44%. Da Vinci system placements increased by 8% to 532, with 303 being Da Vinci 5 systems. SP system placements were 35, and Ion placements were 42. Average selling price, ASP. The ASP for purchased Da Vinci systems was $1.68 million, driven by a higher mix of Da Vinci 5 and dual console systems. Gross margin. Pro forma gross margin for the quarter was 67.8%, down from 69.5% in Q4 of last year, reflecting impacts from tariffs, higher facility and service costs for Da Vinci 5, and a greater mix of newer, lower-margin products. Operating expenses. Pro forma operating expenses increased 16% year-over-year, largely due to a significant donation to the Intuitive Foundation, increased headcount, and higher variable compensation. Net income and EPS. Pro forma net income was $914 million, or $2.53 per share, compared to $805 million, or $2.21 per share, last year. GAAP net income was $795 million, or $2.21 per share. Balance sheet. We ended the year with $9 billion in cash and investments. Clinical highlights. Dan Connolly, VP of Investor Relations, provided an update on clinical highlights. Conversion study. A recent meta-analysis published in the Annals of Surgery demonstrated that patients undergoing robotic-assisted surgery were approximately 50% less likely to require conversion to open surgery compared to laparoscopic procedures. Hernia repair study. A Danish nationwide study in the Journal of Abdominal Wall Surgery showed a significantly shorter length of stay and a 44% reduction in readmission rates for robotic-assisted ventral and incisional hernia repairs. Crucially, the study found that mean procedural costs were comparable for primary ventral hernias and decreased for incisional hernia repairs with a robot-assisted approach. Financial outlook for 2026. Dan Connolly also provided our financial outlook for 2026. Da Vinci procedure growth. We anticipate full-year Da Vinci procedure growth in the range of 13% to 15%. Key drivers will include general surgery in the U.S. and international procedures outside of urology. We are factoring in potential impacts from changes in ACA premium subsidies, Medicaid funding, capital pressure in Europe, China tender volumes, recent capital challenges in Japan, and new pharmaceutical products for obesity management. Gross profit margin. We expect pro forma gross profit margin to be within the range of 67% to 68% of net revenue. This guidance considers impacts from tariffs, faster growth of newer products like Da Vinci 5 and Ion, incremental depreciation, and higher Da Vinci system upgrades, partially offset by cost reductions. Operating expense growth. Pro forma operating expense growth is expected to be between 11% and 15%, reflecting higher R&D spending and incremental expenses from our distributor acquisitions. Non-cash stock compensation expense is estimated between $890 million and $920 million. Other income, primarily interest income, is forecasted between $355 million and $375 million. Income tax rate. We estimate our 2026 pro forma income tax rate to be within the range of 22% and 23%. Key risk factors and future considerations: macroeconomic pressures. The outlook for 2026 considers potential impacts from broader macroeconomic factors affecting hospital budgets, such as changes to ACA subsidies and Medicaid funding. Competitive landscape. Increased robotic competition, particularly in China, and provincial tenders favoring local suppliers are noted as challenges. Japan market. We are monitoring the reimbursement evaluation for additional robotic procedures in Japan, with an update expected on the next earnings call. New product mix. The ongoing introduction of newer, higher-margin products like Da Vinci 5 and Ion, alongside the expansion of the XR system, introduces dynamic shifts in gross margin and ASP. Ambulatory surgery centers, ASCs. Our expansion into ASCs, leveraging the XR system, is viewed as a multi-year effort, with an initial focus on higher-volume ASCs. While this can bring economic benefits, the movement into ASCs and the use of refurbished systems are factored into utilization and ASP considerations. Most important statements from CEO and CFO Dave Rosa. We continue to believe we are in the early stages of this journey, transforming minimally invasive care. He emphasized the company's commitment to improving patient outcomes and the value of their expanding digital tools like MyIntuitive Plus, which is designed to enhance surgeon performance and collaboration. CFO Jamie Samuth. Total procedures grew 19% and total revenue grew 21%. Pro forma operating margin improved approximately 70 basis points to 37% for the year. Jamie highlighted the strong financial performance and a significant increase in free cash flow, underscoring the company's solid financial health. In conclusion, Intuitive Surgical delivered a robust fourth quarter and full year 2025. We are well positioned for continued growth, driven by strong procedure volumes, expanding platform adoption, and strategic investments in innovation and global market access. We look forward to another strong year in 2026. This concludes our summary. Thank you.